So 2020 was quite the year for stocks, and a number of stocks and ETFs are still into uptrends, strong uptrends, as we head into 2021. And the question is, how do we participate in a strong uptrend and control our risk? And today I want to show you the ATR trailing stop. Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting, the first show for 2021. I'd like to take this chance to wish everybody a happy, healthy, and of course, prosperous 2021. So today we're going to talk about three things. First of all, we've got a number of consolidations out there. Some of them started in December, and we saw some breakouts in late December and early January. And some ETFs are still stuck in consolidations, and we want to watch for breakouts. Then second, I want to turn to that ATR trailing stop and show an example using IWM, because IWM has just been on a tear since early November, and it continues to hold that trailing stop. And then third, we're going to turn to silver and gold. And I say silver first because silver is the stronger of the two. Let's hit the charts. So it may seem like a bit of an oxymoron, but mean reversion is part of a trend following strategy, because we know that trends can last a lot longer than people expect, but we need to find spots to jump onto these trends. And the way we do that is with some sort of mean reversion strategy. So this is the home page of Trend Investor Pro. And if you click on the analysis page, you'll see all the commentaries available. Premium is for subscribers, but the green is open to everybody. And I've created a ranking table with trend following signals and mean reversion setups. Very easy to track these, and I explain how that works. And I've got the table updated for yesterday's close. That would be Tuesday's close. I'm recording on Wednesday midday Eastern time. And you can sort this table by different means. And I've got a sort here which is up and oversold or down and overbought. And what this shows me is basically I'm looking for ETFs that are in uptrends. So there you can see all these are in uptrends. I'm using Stoke Close to define those uptrends. And then I'm looking for when RSI dips into that 30 to 50 zone over a 5-day period. In other words, I'm not looking for the exact day necessarily, but when I'm running a screen or a scan, which is basically what this is, I'm looking for something where RSI dipped into that 30 to 50 zone within the last 5 days, and the bigger trend is up. And that tells me we've had a mean reversion or some sort of consolidation happening on the price chart, and I need to check out that price chart. And then over on the right, there is a link where you can click to get a sharp chart with the indicators that I'm talking about. And I clicked on one of those links here, and it talks about XLI, or it shows XLI, the Industrials SPDR. And you can see here that, it really weren't in uptrend until August when we got above the 200-day and stayed above it. There was, a nice pullback here in June and a little breakout. But you can see here when we're above the 200-day, you get RSI into that 30 to 50 zone a couple times, and that's your pullback within the uptrend. And here you can see we didn't have really a pullback. We just had a consolidation. It kind of drifted lower. And when you drift lower, your momentum indicators, they gravitate back towards the center line. That's the midpoint of the range for RSI 50. And so, you get a momentum upsurge there in November. And then as momentum flattens, it moves back to that center line, and it moves into that 40 to 50 zone. It held above that 30 level there. And so when you're in that 40 to 50 zone, you're below 50, you know that you have some sort of mean reversion set up, and you need to pay attention to the chart to look for a catalyst. And if we do some basic drawing, there you can see we had this basically a big surge, 52-week high, a pullback, and now we're getting a breakout. And that breakout is signaling an end to this corrective period here, this short-term corrective period like a flag, and a continuation of the bigger uptrend. So here's a chart of IWM on StockCharts ACP. And I've got RSI in the indicator window, and the red line is the 200-day moving average. And first of all, let's just look at the bigger picture here for IWM. We can see we had that surge to the 200-day, and we battled that with a consolidation in June, and then got this breakout here in July and hit a higher high, and then tested the 200-day again here in September. And notice that you're above the 200-day. You've been making higher highs, so you can make a case that the bigger trend is up. And then you get RSI moving into this 30 to 50 zone. And this is what I call the mean reversion alert zone for RSI. Because when you get RSI, 14-period RSI, in this zone, it tells you that you've had a consolidation or some sort of pullback. And that's indeed what we had with IWM here. We had this higher high, and then we had this pullback, and then we got this breakout. We got a second pullback here, and again, RSI was in that 40 to 50 zone. It held above this low here, a little bit better on the momentum, if you will, less downside momentum there. And so we had this pullback, and then we had another breakout. And if we hone in on this chart a little bit more for a little bit more detail, you can see here, I'm going to remove those annotations, but what we had was basically an island reversal kicking it off here and starting this strong move. And you say, well, man, I missed the island reversal. And then we got this gap, and you're saying, oh man, RSI is at 70, it's overbought. How am I going to trade this? Well, you need a way to control your risk. You need an exit. If you can see the exit, then you're going to have more confidence going in. It's like I'm a scuba diver, and I don't dive into caves, but I will go into a opening that has a light on the end of it, for instance, in a cenote. So as long as you're going into that tunnel or cave, and you can look back and you can see the light, which is your exit, you have no problem going into that cave. You feel safe. And that's kind of what this ATR trailing stop does for you. And it's part of the Trend Investor Pro Indicator Edge plugin. And if you go down to the right side there, you can see the plugin icon. And you can click on that to see all the plugins that are available and learn more about them. So I'm going to go ahead and open up this window to the left and scroll down to the indicators. And I'm going to choose the ATR trailing stop. And then I'm going to click on the chart where I want to start it. So I could start it with this gap up and breakout if I was long there. I could start it with this gap up here and breakout. And so what is this indicator telling us? Well, if you look at the settings over here, it's based on 22-period ATR, and it's a multiplier of 2. So we're doing 2 values of 22-period ATR. The direction is long, so it's underneath. It's calculated from the close. So you see the little hash market there. That's the close for each day. And so basically what happens is, as the price rises and the ATR trailing stop, as price rises, the ATR trailing stop rises. So I'm going to move this pointer here. So there you can see we're making a higher high on a closing basis. This is an intraday high. And so the ATR trailing stop rises. And we make another higher high here, and the ATR trailing stop rises. So it's always 2 ATR values below the close. And you can see that that means you're going to get somewhat of an outsized decline to reverse this or trigger the stop. Not reverse, but trigger the stop. And you can see how tightly it's held. And then we had this pullback here, and we even dipped below it intraday 3 days ago, but you can see we didn't close below it. I like to use closing prices for my indicators. And so if you use the ATR trailing stop, that gives you an exit. It says, there's the light at the end of the tunnel. I know I'm safe. I know where my maximum risk is. And you can see we're at a new high here on a closing basis. And so that ATR trailing stop ticked up again. So I put out a report on Monday noting a number of ETFs that were in this consolidation phase. One of them was XLI that you just saw. Another one was XLV, the healthcare SPDR. And you can see here that it consolidated here after hitting a 52-week high. And you know, this one's just been working its way, grinding its way higher above the 200-day since April there. Nothing exciting here, but hey, it's making new highs. It's in an uptrend, and that is pretty good. That's something you want in your portfolio. So you got this big surge, digested the gains, and now we're breaking out and hitting new highs. And you can see RSI just got below 50 in late November. It didn't make it below 50 in late December, so sometimes that happens where you don't get that heads up. And that's why we always got to be studying the actual price charts, because sometimes our indicators don't give the signals. This next one we have was also highlighted on Monday and in late December. It's XME. And man, anything related to base metals has been on fire. This could be related to China as well. We noted some mean reversion opportunities in FXI, and it got a nice bounce. And if you look at XME, it had this little flag. I mean, it had this huge move up, 23 to 33. And this is a classic flag. And then we break out and we're surging over the last 3-4 days. So that surge started just before year end. RSI did not make it back to below 50 on the pullback. And this is one where you had to be tuned into the chart to catch such a signal. So I put out this chart on Monday, the first day of the year, and it was basically covering performance for a number of intermarket related ETFs for 2020. And what really surprised me was, look at silver. Silver was up 47.3%, and QQQ was up 47.57%. Of course, Bitcoin left them all in the dust, and maybe we can add that to the intermarket arena, but pretty impressive performance for silver. Now, QQQ finished at a new high for the year, but silver's still below its high. Gold performed very well last year. You can see it was up 24.8%, so not bad at all there. So let's look at those two charts. So here is gold, and man, look at that big move. I mean, this is clearly in a longer term uptrend. We had a pretty long correction here from August until December, and then got a nice big move the last 1, 2, 3, 4, 5, 6 weeks or so. And so if we look at this chart here, it looks like we've had a correction, you know, a surge, about a 50% retracement, and we're trying to break out. Now, we fell back today, but this zone here, I think, acts as first support. And you might check out a daily chart for a little more granularity. But gold could be poised to firm in that 175 area on this pullback. So that concludes this first presentation of 2021. If you'd like to know more about trendinvestorpro.com, please check out the website. We've got a lot to offer. I'd like to take this chance again to wish you all a happy, healthy, and prosperous 2021. Take care.
If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.